Sound familiar? It should. But there was a problem brewing beneath the surface. By the late 1800s, a new economic power was rising across the Atlantic. The United States had surpassed Britain as the world's largest economy. American factories were outproducing British factories. American innovation was outpacing British innovation. American wealth was growing faster than British wealth. Yet the pound remained dominant. Why? Because of something economists call inertia. The world was used to using pounds. The financial infrastructure was built around pounds. Changing to a new system would be inconvenient. So even as Britain's economic foundation weakened, its currency remained strong. For a while. Then came World War I. Britain borrowed staggering sums to finance the war. By the time the guns fell silent in 1918, Britain had transformed from the world's largest creditor nation into one of the world's largest debtor nations. They owed money to everyone, especially to the United States. But instead of accepting this new reality, instead of adjusting their spending and their ambitions to match their diminished position, Britain made a fatal choice. They tried to pretend nothing had changed. In 1925, Britain made what many historians consider one of the greatest economic blunders of the 20th century. They returned to the gold standard at the pre-war exchange rate. They wanted the pound to be worth the same as it had been before the war, even though Britain itself was no longer worth what it had been before the war. It was pure ego, pure denial, and it was devastating. To maintain this artificially high value of the pound, Britain had to keep interest rates painfully high. This strangled economic growth. Unemployment soared. British exports became too expensive for foreign buyers. Meanwhile, British leaders kept spending as if they still ruled the world,